Hi, good morning. Ross McInnes from Australian Investment Research Services. Thanks for joining us. Important night overnight with the markets holding very crucial levels after entering in New York session under extreme pressure. We had a late sell-off in Asia yesterday that was reflected by the US S&P 500 index testing down to that 10,040 level. Into the New York Open, the S&P 500 tested on the physical index down at that level as well, which represented a 6-month low, and it seemed like the market was going to break through, but through the session the market picked up and had a late rally to close pretty much unchanged at 1,073. We had our first piece of major data for the week, which was US consumer confidence for May, which is put out by the US Conference Board. And this came in much better than expected at 63.3 versus expectations of 59. And it does seem that the better payrolls numbers that we've been seeing over the last couple of months are starting to impact on consumer sentiment. And in this respect, we've got the next May payroll numbers out next Friday, which might provide some stability for the markets and a focal point other than this ongoing European problems. In terms of that too, we had another European country come out with an austerity budget last night, which this time was the Italians, looking to take out 24 billion euros out of their budget over the next 2 years, and looking to target a 2.9% debt to GDP ratio for the government. So again, we continue to focus on the medium-term valuations that are here, or the good value that's here, versus the short-term volatility. And whether the European slowdown that's now expected is going to be a mild one rather than a back into recession level. So that's continued to drive the markets. The Australian dollar followed pretty much the S&P 500's price action. It tested down to 80.60 into sort of late Europe, early US trading, which represented a new 10-month low, but has rallied all the way back up to 83.07 just before Sydney opened, and is now trading back around 82.70. The focus today in terms of Australian dollar is that there's probably going to be buy stops above 83.50. The market's been getting short around these current levels, versus the fact that we really haven't had any major resolution yet in Europe, and the negative North Korean factors are still around. On the day, we get some Australian data, Australian March quarter construction, which includes engineering construction numbers, which in the budget that we released 2 weeks ago was looking for some major strength there, and we're expecting around a rise of about 3.5%. This series is important because it also feeds in tomorrow's private capital expansion numbers, which, although a little bit out of date now that this resources tax may have interfered with anticipated capex, still going to be important for the run into the GDP numbers next week. So overall, still faced with the medium-term value that's been created versus a short-term volatility, and whether markets can get their head around just how deep, if any, this shock has created for real activity. So thanks a lot, and we'll speak to you later tonight. Bye-bye.